Hi Nick, good morning. Welcome to the Money Clinic. How you keeping?
Yeah, all good, Conor. How are you?
Pretty good actually. Kids are back at school, which is a game changer, I think, for lots of people. Yeah, but just wondering how you have you been getting on. We're getting a lot of views on the video and lots of positive feedback. So we're adding some value, which is great to both of our networks. But how's the last 7 days been with yourself and the markets?
Yeah, it's all been good. I mean, I've had a couple of good weeks, decidedly good weeks for the last 2 weeks. It's the same sort of themes, to be honest with you. Everybody's expecting this economic recovery happening in the second quarter. Everybody's kind of, there's this pent up angst, if you like, at the moment, waiting for it to happen. Everybody expects the second half to be better. People are looking where to place their money, and so they're looking at the different risk assets that there are out there. So they're rotating out of some into others. The dollar has been at its strongest for the last couple of weeks. It's really picked up in terms of value against or strength against sterling and the euro. So that seems to be where some of the risk assets are moving at this time. But yeah, equities are off a little bit this week, but I think I've mentioned a few times in the past that at these record levels, I find it difficult to buy. So it kind of suits what I'm trying to achieve. If we see a small rally, I sell into it and try and take profits as we move away. So working well.
So how does that work then? So I'm obviously I'm immersed in reading and I'm trying to study this myself,
Yeah.
with my own funding and debt business. And the general sort of mood right now is that there's so much pent up demand. Everybody is expecting the economies to open up and kick in, and a lot of growth actually in the next 6 to 9 months. How do you think that impacts the markets then? Is there just so much money sitting ready, or is the stock market going to grow in confidence and value? How do you see that, given the context that most people are now anticipating this huge period of growth?
Yeah, well, I mean, the markets are fairly confident and have been for a number of weeks. And you can see that with a couple of different things. One of the charts we're going to look at in a few minutes for you, which is the volatility index, which gives you an idea of how volatile the markets are at this particular time and how confident people are with that. Are there any, big surprises around the corner? So the markets are reasonably happy with the way things are at the moment. You've got Janet Yellen, you've got Jerome Powell, who pretty much sing from the same hymn sheet, which is usually quite unusual for that combination of officials in the US. But yeah, huge pent-up demand. There's a lot of money that people are seeing as being saved, and it's got to have somewhere to go. So, opening up of retail and everything else, potential holidays down the line and things like that we all thought we'd forgotten. People are going to be buying. So that's where the demand is going to come from. I think the worries at the moment are, of course, the vaccine rollout, more so in Europe than anywhere. We're still hearing, Belgium's locked down again for a period of time. Germany was locking down, now isn't locking down for a 5-day period over Europe. So I don't think that that everybody's on the same sheet as regards to exactly where we are with the vaccine. And that is a little bit of a concern. But the US, the UK, they're steamrolling ahead with the vaccine. It all looks good, but it could be very localized in those countries because there are issues in other parts of the world.
Yeah, it's a bit discombobulating. Our own health minister came out yesterday to tell everyone, to cheer everybody up, to say to cancel your summer holidays. So I think I might be holidaying with you in Galway this year in the spare.
Yeah. It's not that expensive, to be honest with you, Conor.
No,
I'll look after you.
Two things. So I want you to talk briefly about the slide in the GameStop.
Yeah.
And
well,
I want you to share then after that the volatility slide, which is really interesting, that we spoke about just before we started recording. So crack on.
Sure. So the first one that we've got here is GameStop. So as we were talking about just before we came on air, there has been a huge sell-off in GameStop. I think we mentioned it at the beginning of last week. There have been earnings out. It's a fundamental piece of news. Should have some relation to what's going on within the stock and with the value of the stock. So as you can see, this is just a 5-day chart. So we were up at $2 right now today. At the extent of the sell-off, we're down at $120. So it's fallen $80, probably more than 40% of the value just last Friday in that couple of days. And it's because there's nothing fundamental stacking this up. GameStop is purely a Wall Street bets Reddit play at the moment. And as the share price starts to come off, as we've spoken about in the past, there's going to be, that angst, that need to unload some of this equity. And that's what we've seen. So it's a fairly significant drop off, just 34% falling yesterday.
The issue there for me then is if we accept that at any one time there's maybe 30% of the market is this retail army, unsophisticated, the people on apps. Whenever this thing happens, I mean, people are going to lose their shirts here, yeah.
Absolutely, and it is, it's one of those things. As the market starts to fall off, as it gathers more momentum, and as it's falling quicker, more and more people are rushing in. So you're just pushing the price down. You need somebody to bid to try and buy the stock, but as that market is accelerating to the downside, they all just disappear. So you're all trying to beat each other it really is a race to the bottom. That's the way to describe it.
For me, it's black or red, casino economics. So bring us up the volatility slide then.
So hopefully that's changed your chart, has it?
Yeah, it's good.
Okay, so this is just a volatility chart, and so it's called the VIX, VIX, and what it is it shows, or one of the ways I often describe it as a fear index. So when the volatility increases, there's a lot of fear and worry about the market, and when it falls to the downside, people are becoming more confident, more comfortable with what's going on. So on the left-hand side of your screen, VIX was up at 70% a year ago. The pandemic's hitting. Everybody's really worried about what's going on. Nobody has any clear line of what's going to happen into the future. And we trade up at 70%. The market's flying around all over the place, and there's no confidence. What happens over that period? You've got a couple of spikes occurring. One of those will be the election in the US. It spiked back up to 40%. But we're starting to settle down around 20%, which you can't really describe anything as the norm, but that's low volatility, and it means the market is comfortable, confident with the current state of the marketplace. It measures S&P options, and it's a good bellwether for where we are with the market and the degree of confidence that you see in the market.
So my observation there is since the election then there's some kind of political stability in the States, since Biden you can see there that things have settled down a bit, yeah?
Yeah, no, exactly that. So people are more confident with what's going on and what's in the future. We've spoken in the past, markets are always very much forward looking. So they're looking at the second half of the year now and what's going to happen there. I've got a question for you.
Oh dear, go ahead.
There's been lots of people who've been emailing in and making comments about the chart behind you. So is there any chance you could explain it to people? And I know Liliana's been drawing on your screens, but if you could explain it, that would be great.
It's a very complicated piece of data, this. No, I suppose the truth is, it's sort of representative of what we do as a firm. So GDP, we're a solutions-based business, and the interesting thing is we all think in pictures. So drawn a bit of a diagram. So basically, we've been trading about 10 years, and in that time in our debt business, we've been able to write off £500 million worth of debt. So as soon as people come in, we sort of tell them that we're quite proud of that. But the whole idea is this is the fire here. So people come into us whenever they've got a problem. And we basically, what we do is we give people plans. So if you're looking for funding, we have a plan for that. If you're looking for debt advice, we have a plan for that. And the whole idea, I don't think you can see it, is once you finish dealing with us, this is the whole idea, is up here is a very happy person. So you leave very happy. So that's sort of how our business works through 5 steps. And actually, I have had quite a bit of people who said to me, what's going on with this plan at the back of the chart? So there you go. That's the rationale behind the plan. So listen, there you go. With 30 seconds, anything else just to tidy up? We'll not talk about football this week. It's an international break. And I think we'll just catch up again next week. Yeah,
we'll do that. Well, I mean, none of the United players are on the international break, I'm sure. But
just running out of time now, so we'll end the money clinic for this week.
See you later.
Cheers, mate.